There's a lot of junk media, especially in the finance space, be it from some talking head economist or big social media account, many of which don't know which way is up. I feel it is as important as ever to get educated and to understand a chart, because it's the price action on the chart which tells us exactly what traders and investors are doing and whether there are large inflows or outflows of money. So in this video, I'm going to share with you one of my main go-to signals which helps tell me exactly when the market will most likely reverse, be it from down to up or up to down. I believe this one signal alone will put you ahead of basically every single mainstream economist, and you don't even have to wait for that next announcement what the interest rates are or what the Fed's going to do, but you watch the video and be the judge for yourself. So without further ado, let's jump straight in. And first, remember that you must always do your own due diligence and research. Past results are not indicative of future performance, and I'm not a financial advisor, so you always need to seek help from a trusted professional. And for some media that I do recommend, definitely watch Jason's YouTube channel and of course my YouTube channel, and you can also subscribe to our free report. There's a link at the top of the video description. So in essence, the signal is extremely simple in that we only have to count bars from extreme turning points. Now this has been derived from the work of W.D. Gann, but it is my own work where I put my own twist on it, and I'm going to be going through 3 years worth of data in Bitcoin to show you how it does work. But this signal can also be applied to any other market or any other charts. Now what we're going to be looking at and analyzing are extreme turning points and how the market behaves at those turning points, specifically looking for a 3-bar move, either 3 up bars or 3 down bars. But the trick is how these bars are defined is very, very important. Now I'm not going to be going through the exact definitions because I have an indicator that does it for us, which is very easy to actually go into, turn those settings on, and then we can just look at those arrows. So while this video isn't intended to be a plug for the TIA Gann swing indicator, because I use it for all of my trading and my analysis, there was no way to escape it. So of course you can also get the indicator for yourself. There's a link in the description below for that. But what we're looking at are 3 consecutive bars from extreme tops or extreme bottoms. Whenever the market's trading within a high and a low, those signals are not important. And if you're wondering what the hell I'm talking about, I am going to be going through 3 years worth of data so you can see exactly how it plays out from extreme moves and how it does get very close to predicting tops and bottoms in the market. So before diving into the nitty-gritty of the signal, I thought it was really important to put this video together because the market's obviously been in a screaming uptrend and everyone's waiting for this big correction. Now, of course, I'm guilty of that. Everyone's guilty of waiting for the correction just so we can see how the market behaves, if the macro trends are going to continue. But the thing that we always come back to, or the thing I always come back to, is looking out for the trend. The trend is still up. It's always about not fighting the trend, but looking out for potential areas where the trend may reverse. That's what the analysis is for. We have our support and resistance areas, our 50% levels, and all of that kind of thing. And this here is just another early indication of letting us know when we may be seeing a bigger picture correction take place. And as you're going to be seeing, it gets very close to some extreme turning points. So while the market continues in one direction, be it up or down, because the signal works for both rising markets and falling markets, there's really not a whole lot to do other than just go with the trend until we start to see some of these signals take place. And of course, we haven't seen that signal yet, and the market has just been in a screaming uptrend since the middle of September, which we got very close to, and I also shared this signal at the time then, and we haven't seen a reverse signal take place yet. So a lot of talks of trends, strong trends, reversals, and the signal. We'll dive into the charts now and take a look. And I am going to be going back to the start of 2021 so we can see how it does play out over a large series of data, a large sample of data, and we can just really pinpoint what the signal is and what to look out for coming up. So let's cue the chart up to the start of 2021, and we can turn the setting on, which will let us know exactly what the bar types are. And remember, we're looking out for 3 consecutive up bars or 3 consecutive down bars from extreme turning points. Now the setting in the indicator is called the show bar type, and what you're going to see when you turn that setting on are green up arrows, red down arrows, X's, and then also some blue arrows which have a point on either end. Now what we're going to be looking at here are for 3 consecutive green arrows or red arrows, and we're not including the X's in between. We ignore the X's. The blue arrows do reset the count, meaning that if we do have a blue arrow in between, it doesn't count. We need to be seeing those consecutive green or consecutive red arrows. Now from the start of 2021, we're looking from extreme turning points. You can see here that even from this previous peak, all the way back from the 8th of January, there were only 2 red arrows, suggesting that we hadn't seen a major turning point yet. Now, also remember, we are ignoring signals that are within previous tops and bottoms. So while there were 3 red arrows down in this period here, we're looking out for these signals from the extreme turning points. So in this case here, there was no reversal of the uptrend, which of course Bitcoin and crypto were already in. There was not that signal taking place. So of course that trend is more likely going to be continuing in that upward direction. You can also see from these next tops, there were only 2 arrows, and that big bigger picture trend did still continue. And again, from this top, only 2 down arrows suggesting the macro trend wasn't over yet. Now, finally, we do get that turning point at the peak, in April of 2021 where we finally got 3 red arrows. You can see here, I'll move that red box, which is suggesting the red arrows. There was an X in between, but we do ignore the X's. So ignoring the X from the peak, we do have 3 consecutive red bars from that turning point, the extreme turning point, which did turn the trend down in a very, very big way. But from that peak in April of 2021, we got a massive reversal. Markets fell by 50% or more. Many altcoins got absolutely crushed. But when we're just going back to this simple signal, all we're looking out for is an extreme turning point, which you can see even on that low from the 19th of May, we did not get 3 consecutive up arrows yet. And I'll just zoom in much more closely so you can see exactly what I'm talking about. We only had 2 up arrows. We had an X in between, which we do ignore. And for that reason, it was suggesting that the market wasn't over yet. We're going to be seeing more downside market action. Now, once again, you can see some arrows, 3 consecutive up arrows in between, but we're still within a previous top and bottom, meaning we don't include those signals. We're looking out for turns from extreme turning points. Now, finally, after the market did go sideways for a number of months, you can see a very prominent low in July after falling for 3 consecutive weeks from that last top. Now, when I'm talking about prominent extreme tops and bottoms, all of that kind of thing, I also do use the swing chart where I'm looking out for those weekly turning points. So just to kind of show you what I'm talking about there, you can see that we had a move of 3 weeks down to a potential turning point, and then finally we have those 3 consecutive up bars which did reverse the trend. So this is another signal suggesting that the bigger picture downtrend had changed, and what we're looking at again for are those 3 consecutive bars out of a potential extreme turning point, which is exactly what we got once again in July. Now, many TIA members will recall I did post to everyone hours out of that low saying that I think things have changed in a big way. We're going to be seeing a bigger picture move to the upside, and then we got that confirmation by the way of those 3 consecutive days up. You can see those 3 up arrows there, and of course the market did move away. Now, since that point from July in 2021, you can see that trend just did continue all the way up to the peak in October. We did not have any reversal from an extreme turn of 3 consecutive down arrows, which does suggest that the bigger picture trend is up and going to continue until we do see the signal. Now, do keep in mind that no signals work all of the time. They just give us indications on when we may be seeing reversals in the market. And essentially from that bottom in July, it didn't take place all the way until the top in October, where we had an extreme turning point and the market started to reverse. We had 3 consecutive down arrows. Now, we didn't actually have that signal from the extreme peak. And this is one of those situations where the market came back. It wasn't quite a double top because the market moved a little bit too far in terms of at least the tolerances that I do look for. But we did have the signal to suggest that the market was getting ready to turn because it did come about. So while the market did peak its head up a little bit higher from that turning point, we're already starting to see signs that the sentiment had started to shift because we had those 3 consecutive down bars. So things like this do happen when we're looking at analysis and signals, because it can be just enough to throw us off the scent of what's going on to do with the sentiment in the market. But essentially in this case here, you can see how we just had that one little fake out. The signal still did remain valid, and then the bear market did get underway. Now, of course, there's no point just using one signal in isolation in any trading plan or any strategy. That's why it's important, at least in my opinion, not just to use one signal as the be all and end all, because again, nothing works all of the time. We're just putting it for a few tools in our toolbox that give us some indications of when the trend may be changing. And of course, we have other things to go to, such as 50% levels, trend lines, and some of the other stuff that I do teach in the Investor Accelerator. But after getting that signal in October and then the market starting to fall away in November, in the entire bear market, we did not get one situation of 3 consecutive up bars from an extreme move until June the following year. So what I've got circled here in yellow are those potential extreme turning points by the way of our swing chart. And you can see not once out of those lows did we get 3 consecutive green up arrows. We only had 1, the market continued lower. Then again here we had 2, the market continued lower. And even out of the bottom in January, you can see here that the market was unable to do 3 consecutive up arrows out of that low. And then even again in February of 2022, it was only able to do 1. The market did push higher, but we didn't get that signal to suggest that the market was turning down in a big way. So if that wasn't enough for you, you can also see the signal play out again to the south side, where we happen to see a big picture sell-off take place. Now, as at this time here, I did share with the members that I sold a chunk of my portfolio because the market had broken into bear market territory. There are a few other signals going on, which I also shared on Twitter at the time to say that the bear market was on after we got that collapse in January. But what we're really looking at here, again, is just that signal of 3 consecutive bars out of a potential extreme turning point. And this here is another perfect example of that. And I'll just move that box so you can see exactly what I'm talking about. We have a move into a potential extreme. We don't know it's going to be an extreme at the time, but then we get this signal being 3 consecutive red arrows. Again, remember, not including that little X, we ignored the X's. And from that point forward, the market went down in a very big way. And to continue on with what the market had done in the bear market, you can see there was not one situation of 3 green up arrows. There was 1, then there was 2, then there was 2 again. And even from that bottom in May, there was only 1 consecutive up arrow arrow out of that low. You can see it went up, down, up, and the market was still getting ready to put in another big nosedive. Now, in terms of the bear market, that was really the worst of it from November down into that June bottom. And many long-term viewers will recall, do let me know in the comments section if you were around then, that I was saying that that June low had some hallmarks of being a very major bottom. The timing wasn't quite right because the bear market would have been too short in terms of time, but there were a lot of signals to suggest that we'd seen that final capitulation. And it wasn't until June that we actually had the signal of 3 consecutive up arrows, being 3 up days by Gann terminology. It's very important that we're looking up days and down days to do with the specific terminology, which is why it's coded into the indicator. We're not looking for green bars or red bars. It's a very important determining factor that we are looking out for the specific up days by the way of Gann terminology. So we had the signal in June when the market capitulated. We had 3 consecutive up arrows being 3 consecutive up days, which is letting us know that maybe the sentiment is starting to shift. Now, of course, the market did still take a little while to put in the final low. And what you can also see here is a couple of other situations where the market kind of capitulated into a bottom and then we had a very quick reversal of 3 up arrows. Now, these are within previous tops and bottoms, so we do not include them strictly speaking, but you can start to see how the sentiment was shifting because every time the market sold off in a relatively big way, it quickly reversed, showing that we had buyers hold the market up for 3 consecutive days out of those lows and turning points. So while that June bottom was extremely important by the way of some analysis here that I am sharing with you, you can still see after that next move out, that top that took place in August, we still didn't see 3 consecutive down bars. The market was reset by the way of one of those blue arrows. So that suggested there was not as much bearish momentum. The market was unable to do 3 consecutive down days out of the peak. So it's really important to see these little nuances in the market when we're looking at bearish and bullish sentiment. And if you do recall, I was extremely bullish throughout this entire time, saying that if the market goes lower, it's unlikely to go too much lower because a lot of things were lining up to do with our analysis and our signals. And again, this is just another piece of the puzzle. So of course, we did happen to have that big sell-off in November, which was the cycle low, the FTX collapse. And what this kind of mimics a little bit in reverse is the fact that we had that signal in June. The market did go down and break a little bit lower, but we didn't get that signal immediately out of the bottom. So if you do recall from the all-time high, that's kind of what we saw. So the market was already giving us clues as to what the bottom might actually look like. We had that signal come in early. The market did pop a little bit higher. We didn't get the signal out of the extreme top, and it's basically what happened in reverse at the bottom. We had the signal in June. The market went a little bit lower, but we didn't get that signal out of the exact low. So if you are looking for absolute perfection in your analysis and your trading and your signals and all the rest of it, you are going to be very, very disappointed because again, nothing works all of the time. That's why it's really important to have a few other tools in your toolbox. This is just one of my go-to tools. If you also do recall from November, that's when we had that extreme capitulation event, of course, of FTX collapsing. So when we start to put a few more of the pieces of the puzzle together, there was more signals to suggest that we did see that capitulation in June. We did have the signal, and this was just the final nail in the coffin where the bears got overly bearish and it did mark that extreme bottom. So now we're 1 year from the present day, roughly after getting that signal in June of last year, the collapse into November, and the market started to move away from the cycle bottom. So we can see how this 3 consecutive bars up or down has played out since then. Now this next signal didn't actually take place until February. The market had a very strong run up into February. We had the potential for an extreme turning point, and I will move this red box so you can see exactly what I mean. Of course, we don't know what's happening on the right hand side of the chart, so we're looking at the extreme move in the market, looking out for when that next correction might be. And from that point, of course, we had those 3 consecutive down bars. We ignored the X's yet again, do remember that. And the market also did pop a little bit higher again this time around, but just like the all-time high and the cycle low, the market did pop a little bit higher after getting those 3 consecutive red bars before putting in that next turning point from that March low. So if you do recall, there was a lot going on, a lot of fear to do with banking crises and all the rest of it, but you can just start to see how the signal was holding true yet again with 3 consecutive up bars out of that low. And again, I'll move that green box so you can see exactly what's going on. We had those 3 consecutive up bars out of a potential extreme turning point, and from then you can just see it really has been off to the races. The next intermediate turning point after the March low was April, and we didn't have one of these signals to let us know that a bigger correction was coming. The market was down for a couple of months, but that macro trend did remain intact, which is very important to note. So while the signal didn't take place at the top, we know exactly what to be looking out for to suggest the end of the correction, which is exactly what we saw at that bottom in June. The market moved up for 3 consecutive up bars, and the market was off to the races yet again. You can see here from that low, we had 3 bars. There is an X in between, which we do ignore. And then of course, the market did pump up very strongly. Now, much like the April top, again in July, we didn't have that signal. We had a little blue bar, which reset the count. And while there was a relatively big correction to take place, we did need some other indicators to simply just look at the trend to let us know a bigger picture correction was taking place. But to pick that next bottom, we had exactly the same signal yet again, 3 consecutive up bars out of the low. And then since then, it just has been off to the races. You can see it marked the exact bottom yet again for the 11th of September, 3 consecutive up bars, ignore the little X in between, and there have not been 3 consecutive down bars since. Counting bars from extreme turning points is just a simple way to be looking out for changes in sentiment. Sometimes it gives us a start of extreme moves, and other times it's letting us know that the sentiment is shifting. We can see examples of that from the all-time high, from the cycle bottom, and even the turning point which led to that capitulation in March. Now, this go-to tool of mine does not pick every single top or bottom. That's not what it's meant to do. We're really just looking out for those shifts in sentiment. But you can see just following this one thing in the bear market, it would have avoided buying on these corrections, thinking that the market was going to be turning up in a big way, because there wasn't 3 consecutive bars up out of any of these lows. That didn't actually happen until June. Now, once again, it doesn't capture every single turning point because it was unable to get the top of the corrections both in April and also July. So in these situations here, do we have anything else in our toolbox that can help us identify when the trend might be changing and when we may be seeing a bigger correction? Now, of course, I'm sure you're going to know what I go back to when trying to pinpoint corrections, and it is simply just the swing chart. So once again, those last 2 previous tops, we did not have the signal of 3 consecutive bars. It worked out very, very well to get the end of the correction when the market was going to reverse from down to up. But to look at something else that I cover all of the time on the channel, it is simply just the swing chart. Now, we know that the lower time frame trends do break and turn down, and then that does translate onto the higher term time frames. So in the event of not seeing 3 consecutive bars, once again, I can just go back to the swing chart and look at the 1 bar swing chart and maybe even the 2 bar swing chart, so we can have a couple of time frames at once. And you can start to see when those bottoms do break down on multiple time frames, it is letting us know that a bigger correction may be just around the corner. And to show you exactly when that happened at that previous top in April, we can see that we'd broken down from both a 2 bar swing and some 1 bar swings as well, and that was a precursor to a larger correction to follow. Now, to look at that exact same signal at the top in July, you can also see once the market had broken down from a 2 bar swing and the market had already broken down from some 1 bar swings as well, that was a precursor that the sentiment had changed. So we didn't get those 3 consecutive bars, but the swing chart and the trends were telling us exactly what the market was going to do next, or at least it gave us an indication of what the sentiment was doing, and it was showing us that the sentiment was starting to shift as lows were breaking down. So if I were to see 3 consecutive bars down from the extreme top, wherever that does come in, it's back to the trends and the swings to look out for those changes in sentiment. So I hope this video has been helpful with your trading or analysis skills, where you can just look at something really simple to let us know when the sentiment might be shifting in the market. It's most certainly not the be all and end all, as no indicator or signal is, but it is just certainly one of those things that I do keep a very close eye on to let me know when maybe the market conditions are changing. There are links in the description below for things I've been discussing in this video. You can get yourself a discount on TradingView to upgrade your plan, or you can get access to the indicator, which is available on the free version of TradingView as well. Also, join Jason and me in the Investor Accelerator, link at the top of the video description. That's it from me today. I hope you found some value out of this video. If you did, drop me a comment below. I wish you all the very best in your trading and investing education. That's all I've got for you in this video here. I hope you do stay happy, healthy, and well, and until next time, I'll catch you then.